I'm Don Manzullo, the President and CEO of KEI, and we welcome you here this afternoon for, I believe, an extraordinary presentation. One of the problems we have today is that people do not take the time to look forward, and unfortunately make the same mistakes as in the past. Looking forward is not an exercise, but an absolute necessity in a world where knowledge used to be discovered, and today it's invented, because of a technology that has no boundaries or limitations. And into the new worlds of big data and the Internet of Things come this thoughtful, original, and futuristic document written by Danny Lipsinger, Carl Dahlman, and Shahid Yusuf, and sponsored by the Korea Institute for International Economic Policy, KIEP. One gets an idea of the scope of this document by looking at the myriad of contributors, including Dr. Tim Persons, Chief Scientist at the Government Accountability Office. I worked with Tim a few years ago on a project dealing with 3D printing and manufacturing, which has turned the world of engineering and manufacturing on its head. The term megatrends is defined as a global, sustained, and macroeconomic force of development that impacts businesses, economy, society, culture, and personal lives, therefore defining our future world and its increasing pace of change. This astounding publication is available online at the Korea Institute for International Economic Policy, KIEP. As I've been reading through it in bits and pieces, because it's such a fascinating document that you simply can't sit down and absorb it all at one time, you will see the extraordinary thought and wisdom and knowledge that went into it. We're happy to have as our moderator Nick Eberstadt, who is the Henry Wenton Chair in Political Economy at the American Enterprise Institute. Nick?
Don, thank you very much for that kind introduction. I'm going to sit down here. You can decide whether you want to stand or sit. Welcome, ladies and gentlemen, to KEI, and welcome also to our online audience. I think you're in for a real treat today. This is not your average economic policy analysis study. This is the now for something completely different portion of the program. What you are going to be treated to today is called in some circles alternative futures analysis, in some circles scenario analysis, but what one always sees in these sorts of exercises is an engagement with a plausible set of future possibilities, a sort of a diagnostic that tells you about what you should be doing now, what you need to know now, what policymakers should be thinking about now. I've had the fortune and the misfortune to participate in more than a few of these scenario exercises or alternative futures exercises. And I can tell you that the difference between a superb analysis and a miserable one is the principles, is the human ingredients involved in this. Because at the end of the day, this is not science, this is art, and it depends critically upon the artists, which is why I think we have such a happy arrangement here today with our three principal authors in this study. I think without revealing anybody's particular age, it's fair to say that we have accumulated more than a century of wisdom in policy analysis and economic research and abiding focus on East Asia and the Korean Peninsula. All three of our authors were all-stars in economic research and policy analysis at the World Bank, and they are now all at the Growth Dialogue Institute at George Washington University. Danny Leipziger, Carl Dahlman, and Shahid Yusuf are all with the Growth Dialogue Institute, and they have produced this superb study. It's a lot of fun to read. It is actually an economic analysis document that is written clearly and in enjoyable English, so don't be afraid of it. I think maybe what I'll do is I'll start off by turning it over to Danny, who I think is going to turn it over to Carl and then to Shahid, if I understand correctly. So welcome all.
Given up a lot to be here. Not only do we have a century of age, but we have a century among the three of us of World Bank experience, with Dr. Youssef being the senior man. So, as we described here in this title, we're looking at the economic challenges facing Korea 5 or 10 years out. Okay, one of the advantages of that is it's hard to be proven wrong, at least right now. But the reason for this is that we felt that despite Korea's remarkable history, there were a new set of challenges out there in the global economy that could turn into negative events for Korea. So I want to say one thing before we get started, and that is the project is not about prognostication. The project is about preparedness. Okay, we are looking at certain mega trends which we think have a high probability of existing in the next 10 years. Among them, disruptive technology, a peaking of globalization as we have known it, and perhaps an increase in uncertainty, particularly in policy making. And I think we can just look around town and perhaps agree that policy is less predictable. In that environment, we subjected Korea to certain shocks, right? And Carl Dahlman will explain in greater detail how the scenario analysis works. But basically, we are looking for black swan events. Black swan events are low probability, high impact events, right? We don't think they'll happen, but if they do happen, the consequences are significant. The 2008-9 global recession was one of those kind of black swan events that people didn't anticipate. So for Korea, as one of the world's most open economies, they've had a lot of benefits of being open, and they have done well. But in this world in which we are looking, a world of mega trends that are going to shift the landscape of globalization, as well as in these black swan events, we think that there are certain vulnerabilities that come up. These vulnerabilities are based on the fact that Korea relies heavily on how the global economy performs. So if the global economy doesn't perform well, and there are non-negligible risks that this will happen, they could face problems. Korea also is very highly export-oriented, you know that, but it's also highly concentrated in its exports. So China and the U.S. account for 40% of Korea's exports, which is a vulnerability, right? And one of the scenarios that we put forward, and we did this prior to Donald Trump being even a candidate, was to look at the possibility of a trade war between the U.S. and China. So at least we were on target with that one. The third reason I think that we think this analysis may be useful for Korea and for Korean policymakers is that Korea is going through an interesting phase. It went through a period of technology imitation, now technology innovation. But the question is, how adept will Korea be in a world in which we will have rapid changes in technology and perhaps winds of global retrenchment, i.e., we don't have to rely so much on trade because we have technology that can make up for logistics and we can produce at home. So the question really is, can Korea be as adept as a Singapore or somebody else? The final risk element really is domestic. Okay, so Korea has gone through a lot of different phases, but the current phase in domestic politics is one in which we see an aging population, we see increased poverty among the elderly, we see disaffected youth, we see greater wealth concentration, we see savings rates in households that are lower than they've ever been before, along with higher indebtedness. So the social consensus that may be necessary to adjust to some of these black swan events may not be as forthcoming as it has been in the past, in particular because the relationship between government and business has changed, right? And, you know, it was a good thing that the Chaebol weren't instructed by the Ministry of Finance about what to do, but we also have a disconnect sometimes between what government is doing and what business is doing. So this is the context for this report that we did for KIEP. And the order is going to be that Professor Dahlman will now speak a bit about what the project covered, how we went about it, what the goals of scenario analysis are, and then deal with some of the shocks that we expose Korea to. And then we'll pass it on to Professor Yusuf, who will look at some of the additional megatrends and black swan events. And ultimately, we'll come back to this side, and I'll end up with some comments on the risks and vulnerabilities facing Korea, which is essentially the last chapter of this book. So that's what we hope to do, and I'm going to hand it over to Carl.
Thank you very much, Danny, and also thank you very much for KEI for hosting this. We're looking forward to the discussion, so we'll try to be brief. So my task is first to explain a little bit what the scenario analysis was about and how we approached it. Scenario analysis can't predict the future. We can't predict the future. We're always surprised by what actually happens, totally unforeseen sometimes. But it's very useful to sort of sensitize, and in our case, we're trying to sensitize policymakers about things that could happen, to get them to think about how they might react to that and what they might need to do now to be better prepared in the event of some of those things happening. And this has been something that's been developed over time, especially for the military, but also for companies. But we're focusing here on policymakers. Now, we had a very broad canvas to start out with, and we looked at risks in the social area, increasing inequality, distrust of government, the breakdown of social cohesiveness in many societies. We also looked at the economic ones, and we know all about uncertainty in economics. Then on the technological side, we're looking at disruptive technologies and all kinds of things that can come from that, and focusing a lot on how that can also lead to problems and tensions across countries, which is very relevant in the context that we're doing here. We also looked at the environment, and that was beyond the remit of what we were doing because we were working with the Korea Institute for Economic Policy. So we were really asked to focus mostly on the economic part. And the last area, of course, was geopolitical issues, which are also very big and very real. And of course, one really big element there that we were very much aware of and discussed is North Korea. But we were told, no, North Korea, just leave that alone. We'll deal with that separately. But of course, in the discussion, I'm sure it will come up. And North Korea certainly is extremely relevant and can be something that will really affect things. So in discussing this, we then looked at broad trends, and we focused on 3 mega trends. One which is increasing uncertainty. And Professor Yusuf is going to talk about that. Another one is a retreat from globalization, which I'll talk about a little bit in a moment. And the third is disruptive technology. So we discussed this with our counterparts, and based on the discussions, we tried to figure out what would be most relevant. And so we decided to build 3 scenarios, and the scenarios are just sort of, it's basically a story of the future. That's all it is. And it isn't based on any really sophisticated modeling. Some people do try to model, but the models are always constrained by the assumptions that they have. So we just call them, they're stories about the future, but things that were interesting to look at because even though they may have a low probability, and in fact some of them not so low probability, they can have a really big impact on a country like Korea. So in discussing that, we focused then on three scenarios. One is a trade war scenario, which I will talk about in a moment. One is a big global financial slowdown, again, maybe another financial crash. And a third is a slowdown in China. And so those were things that we thought were very relevant for looking towards the future, for what Korea might need to worry about, to think about. So those are the things that we came to, and then we proceeded to develop that. So let me start a little bit with this first mega trend on retrenchment of globalization. There are many elements to this, and we can go on and on about many different things. But some of the principal ones are, there's a lot of literature now saying that the global value chains has peaked, and there's now a reduction in how much trade is being done for global value chains. That's due to many different things. There's a lot of development and low cost of transportation, communication, but also it's the restructuring of China, turning more towards the domestic market. And also it's that it is import substituting for a lot of the things that before it was getting. So that's one of the reasons. If you also look at big multinationals, they have been extending all over the world, and there's some concern as to, are they too overextended? And to some extent, there's changes in technology too, which may mean, and I'll talk about that in a moment, that you can really operate with smaller scales. You don't have to go to China to have really large-scale production. Maybe you can have more smaller scale in the different markets. So that's another element. But the third one, which is very important, of course, is the protectionist sentiment, the anti-trade. And that's linked to the other trend about sort of loss of confidence in government and loss of favorable attitudes towards globalization, particularly in developed countries, because as we all know, inequality has increased and many people feel that they have been left behind. And so there's a very strong reaction against globalization, and in particular against countries that were very successful in expanding trade, like Korea or now China. So that's part of the retreat. So let me just leave it at that. We can pick it up in the discussions. So the other mega trend was disruptive technology, and that is very broad. We are in the process now where we can engineer new life forms, engineer new materials. This is really remarkable. We're on the cusp of really dramatic changes. Now, for the report, we were focusing in the near term, just 5 to 10 years. So we're not going to go way out and all these very science fiction type scenarios, which some of the people in Silicon Valley tell us they really can happen. But anyway, we're just looking towards the near term. So in looking at that, one of the most important part is the tremendous coming together of many trends in digital technology, and this convergence of those is leading to a possibility of tremendous automation. And it's not just robots replacing unskilled people, but it's also robots, artificial intelligence, not robots, artificial intelligence, replacing people like us, the knowledge workers, because you can put this into all kinds of algorithms, and we now see all kinds of things like Big Blue being able to beat the Korean Go player and things like that. So that is also coming down the pike, and that is something that's going to really affect where production is being made. And so we're looking very much in terms of how it affects global production. And as you know, countries like Korea have been very successful. They started with labor-intensive exports, manufactured exports. Then they moved to higher value and higher scale, steel and heavy industry, chemicals. And then they moved to electronics. But many of this automation elements, both in the artificial intelligence and in the robotics, are having a really big impact on industries which are very important to Korea, like automobiles and steel and also shipbuilding. And they can have even more in many of these areas. And they can also impact trade and services, where Korea is not that strong yet. But so they can really change the landscape. Now, there are many different estimates of how fast this will happen, and that depends not just on the speed of technology, but also on the relative cost in the different countries, the relative cost of labor and capital. But you see, Korea, for example, is one of the most, if not the most intensive country in terms of robots per capita. China has the largest number of installed robot base, but of course on a per capita basis or per unit GDP, it's not there. But it's automating very quickly, and we'll come back to China in a moment. Anyway, so this automation is a very serious element that people in policy are worrying about. That's where's the future of jobs, and if automation takes over many jobs, the question is, what will people be able to live on, and how will they be able to consume? And so I've talked to some Silicon Valley people who tell us, oh, don't worry, everything is very rosy. Pretty soon we don't have to work because the robots will do everything. But the question then is, who will have the income then to buy whatever the robots are producing? And there's a apocryphal story perhaps of when the labor leader was touring Henry Ford's plant. Henry Ford was very proud to show him the assembly line. And the labor leader said to him, yeah, but that's great, but who's going to buy the cars? That's still the same issue. We still have to confront, things about basic income. But the other element is tremendous disruption in the economy, tremendous reskilling. And there are some very interesting jobs. The McKinsey studies, McKinsey Global Institute has done a very nice study looking at the future of automation, future of work. And they calculate just how many people will be displaced. And the number may not be as big as some people fear. But a lot of people will need to be reskilled, and that's going to be the real challenge. How do you reskill? And how do you put in place a social safety net that can really help people to cope with this disruption? And when you have an aging society like Korea, that becomes a big issue too. How will you be able to take care of the people who have retired, who are 50% on the poverty line? So these are very important implications. So that's a little bit about the automation. So let me talk about the third thing. So a little bit on the trade war scenario. And when we started this, it still wasn't very clear where things were going to go. It's still not very clear, but we've seen some actions. Certainly, candidate Trump announced very strongly that he was really going to put the U.S. first and to really fight strongly against unfair trade practices, and he talked about putting a 20% tariff on all imports, and he hasn't done that yet, but he did pull out of the TPP, and he has threatened to pull out of NAFTA, although discussions are still ongoing, and I think the business community has been lobbying him very strongly not to do that. But on the other hand, he has, the administration in the U.S. has already imposed unilaterally the duties on the washing machines, which are really affecting Korea, 20% and up to 50% after I think it's 1.2 million units are imported, and also on solar panels, which is China. And just last Friday, the Department of Commerce said that they were going to impose, they were talking about imposing duties on imports of steel and aluminum. And so the elements are still there. So we looked at this and said, it's something that could happen. And so let's try to understand how that might impact a country like Korea. And so one of the things we did was to try to ground it in some historical elements. So we looked at what happened in the 1930s when there was this trade war that started with the U.S. imposing duties on Canadian lumber. And very quickly it turned into a global trade war and had pretty dramatic consequences, prolonged the Great Recession. And trade fell like about 60%, but if you take a look, and people have adjusted for the fall in trade due to, of course, the recession itself, and how much was due to the tariffs were maybe about 18 to 20% of the fall in trade. Now, so we sort of fast forward to the present. The world is different. Trade is a much more important share of global GDP. And so based on some models that the IMF had, where they were assuming, first of all, between China and the U.S., unilateral tariffs of 10%, and they sort of analyzed with a sort of computer general equilibrium models how that would impact the global trade. And then they went, well, what if this generalizes to an overall increase of 10% in the price of imports? And so we took this as a baseline, and just for purpose simulation to be somewhat similar to what the case was during the 30s, it was a 20% tariff. So we took a look at that, and the impact is really quite dramatic. The trade falls by 3 to 4%, and the trade falls by 30% when it goes to a global war, and the global GDP falls 3 to 4%. So it's quite significant, and of course that would very, very much impact Korea, because Korea is so dependent on trade. Korea has been reducing its dependence on trade. It's now just 85% of GDP as opposed to 120, which was just a few years ago. But it's still extremely vulnerable, and it's particularly vulnerable to trade with, as Danny already mentioned, with China and with the U.S. Basically, Korea, 26% of its exports are to China, and about 26% of its imports are from China. And to the U.S., it's 13% of its exports and 10% of its imports. So if there's a trade war between these two countries, it's very significantly affected, because these countries will have a lot of additional restrictions on trade, and if this generalizes, it's going to very much hurt the kinds of products that Korea was exporting to those countries. And also, it will impact third markets where Korea is exporting. So it's not just a direct effect to the U.S. or to China, but the impact on third markets, because these countries will be looking for third markets too. So we saw that Korea was extremely vulnerable to this potential trade war, and Danny will pick up a little bit on what some of the implications of this are. So that very quickly was sort of how we approached the scenario analysis, how we picked the three megatrends, and then with the megatrends, the scenarios. And so now Shahid will talk about the uncertainty megatrend and the scenarios on the global meltdown and the China meltdown.
Thanks very much, and thanks for KIE for inviting us here to give this talk. I'm going to complement what Danny and Carl have said, but perhaps go a little bit deeper into some of the points that they have been raising. Let me start by saying that we're living in very uncertain times, but then we've always lived in uncertain times. And there's really no way of ridding ourselves of uncertainty. It's there in the background. Sometimes it's more, sometimes it's less. Mervyn King recently observed that economic processes do not exhibit stationarity. In other words, the world just doesn't stand still long enough for frequency measures to be determined so that one can attach probabilities to future events, which is why we end up making scenarios when writing stories about the future. We can't be probabilistically accurate. So what I'd like to do is to address three questions. One is the current uncertainty in some sense higher than normal? I mean, there's always a background uncertainty, but are we in more uncertain times? How serious are these threats, these black swans which are out there in the distance, both near and far? And then I'd like to say, what are the implications for Korea of these? So from observing developments over the past 6 months, it would appear that political uncertainty has risen, but it's not apparent to me that it's necessarily on an upward trend. Surprisingly, political issues have not deepened economic uncertainty. There is an apparent decoupling here. Until very recently, as you well know, the behavior of stock markets and the VIX index reflected confidence that the good times would continue, which was surprising to many observers, but there it was. There has been a correction, but asset prices remain relatively high relative to past averages. For instance, the KIEP ratio, which Robert Shiller has constructed, is at 32, which is an all-time high. 10-year and 30-year bond rates reflect confidence in the quality of government macroeconomic policies looking forward. In other words, a lot of very smart people whose actions determine market prices are discounting uncertainty created by unsettled politics, and in some countries by rising international tensions. So all these people, so if you believe in efficient markets, these markets are telling you what the future is like, and the future looks pretty great. But it now seems that economic uncertainty is catching up with political uncertainty. Since early in this month, as you know, the stock market gyrations and the upward creep of interest rates, there's also an uptick in the VIX index. It rose from roughly 10 to 12 for the last many months, which is extremely low. Normally it's around 16 or thereabouts. It went up to 30, and it's somewhere around that now. And these have all aroused concerns. So the question is, are we heading for more troubled times, that is, periods of greater uncertainty? And if so, what are some of the storm clouds that lie ahead and on the horizon? I personally, and I may not part company with my two friends here, see less cause for worry over the near term than over the longer term. I think the likelihood of a trade-related conflict persists, but there's a good chance that the damage could be contained. And the reason I say that is that too many politically influential corporations stand to lose. And in the US, as we well know, the deep-pocketed contributors make a big difference to what Congress actually does, and may, in fact, perhaps also influence Mr. Trump. The likelihood of outbreak of hostilities in East Asia triggered by any of the three flashpoints has diminished, perhaps temporarily only. But over the longer term, I think Korea could confront some pretty difficult challenges. And so let me go over four what I think are the most troubling possibilities, and I already, Carl's touched upon them. It's 10 years since we had the last crisis, and memories tend to be pretty short, especially in the financial sector. So we again seem to be flirting with another possible crisis. If rising interest rates puncture inflated stock market prices and put pressure on increasingly leveraged governments and corporations and adversely affect investor sentiments, we could be on the verge of yet another crisis and a great recession, as was happened not very long ago. Uncertainty stems from the fear that in the event of a crisis and the ensuing contagion, countries will be unable to take coordinated action at the desired level and scale, as was the case in 2008-2009. And the reason for saying that is that there's a building up of political differences in the last few years, which wasn't really there in the years preceding the last crisis. And there has been some weakening of the G20, which was instrumental in sort of taking the sort of actions that made that I think contained the last crisis. Secondly, there is a seeming unwillingness to engage in fiscal spending. That is, if there's another crisis, I think governments may be more reluctant to do so, and the reason being that most governments now are much more heavily indebted than was the case in the past. A third reason may be that there may not be an adequate monetary stimulus provided, as was the case in the recent past. And again, the reason being that interest rates are close to the zero bound. They are almost negative on long-term rates. And many governments, many central banks may be reluctant to undertake another bout of quantitative easing because there's so much assets on the books of central banks, particularly United States. The Federal Reserve has $5 trillion in assets, and therefore there's a need to unwind these rather than to accumulate many more. A second source of trouble may be a financial crisis in China. This could be triggered by further increase in total indebtedness, which is currently 304% of GDP, or local government indebtedness, and something that triggers a scare. The exposure of banks to loss-making SOEs is another issue, and there are problems also associated with China's rapidly expanding shadow banking system, which is roughly now $9 trillion of a GDP of close to $12 trillion. A sharp slowing of the Chinese economy, together with an increasing focus on domestic consumption, would reduce China's imports and would exert deflationary pressure on exporters of intermediate products such as Korea, as well as the exporters of commodity exports in many countries in Africa and elsewhere. This could also limit China's ability to push ahead with its ambitious Belt and Road initiative and finance projects in its neighboring countries. There are a number of good reasons why such a crisis could be contained and the spillover effects would be less severe. And let me give you some reasons which have been put forward to say that a crisis in China need not be terribly damaging for other countries. The reasons being that much of the lending to the state-owned enterprises is by public banks. So there's a scope for coordinating if there is any kind of default on the part of the state-owned enterprises. China has a closed capital account, and it seems intent on maintaining this closedness. Central government debt of China is very low. It's in the 40% range. China has vast forex reserves, and because it continues to run current account surpluses, it is accumulating more reserves. Its domestic savings, as you know, are sky high. As latest count, something like 46 to 48% domestic savings. And most borrowing by Chinese entities is from domestic sources, as is the case in Japan, which again is the reason why Japan is less vulnerable seemingly to a crisis. Now, a third factor is, and Danny touched upon it, that China's imports from Korea of semiconductors, cars, auto parts, smartphones, and cosmetics could also be greatly reduced if China follows through with the indigenization, import substitution of all of these products, which it seems to be committed to trying to do. And if it does so, Korea would also face very stiff competition in all of these products in third country markets, as it already is in the case of large container ships. It was a surprise that the recent order for 22,000 TEU unit ships went to a Chinese company when Korea clearly has an enormous competitive advantage in this particular niche of the West market for ships. So the fourth one is economic stagnation resumes. I think this is a concern because until just maybe a year ago, we were all really bothered by the fact that OECD countries and other countries were stagnating. And there is a risk that following this very brief upsurge of growth and trade, which has occurred over the past 15 months or so, that growth would again slump and the growth of trade would again slump, as may well happen. And the reason is persistence of low increase in productivity. Productivity worldwide has been growing much more slowly than one anticipated. There's a paucity of major innovations. This is a hypothesis by Robert Gordon. There is the aging of populations in many countries, and China is one of them, and slow growing or declining workforces, which have been traditionally one of the factors contributing to the growth of all countries. And then more worrisome and for the longer term is deindustrialization of emerging and low-income economies, which over the longer term would be an important source of demand for Korea's exports. So all of these factors, and particularly the longer-term stagnation or decline of emerging economies, is a really very worrisome possibility, again, over the longer term. Right now, everybody's going through a euphoria because we have had several quarters of fairly rapid growth. So what can Korea do to cope with these challenges? Not much if there's a global crisis or downturn. I mean, Korea is just one and perhaps a small player in all of this, and if you have global stagnation or something along those lines, or a crisis, a financial crisis erupts in Europe or the United States, it's not a lot that Korea could do. It'll just have to roll with the blows. But it can take steps to avoid losing grounds to its competitors in the export market. Let me say that Korea is advantageously placed at present. It is ranked fourth by the Economic Complexity Index, which is put out by MIT. That's quite revealing, and the trend is upward. So it's one of the countries with the most complex basket of exports of any country in the world. Secondly, it's the sixth ranked innovator in the US PTO. So over a long period of time where the PTO has collected these statistics, Korea comes out number 6. So, the only countries ahead are the usual ones: Japan, United Kingdom, France, United States, and Britain. It's also ranked 11th by the Global Innovation Index, and Korea's spending on R&D is possibly the second highest in the world. So in some sense, it is very well positioned and is positioned itself to be an innovative country that can continue to grow and allow its GDP to grow. If I was inclined to bet on where Korea should put its money, I would say it should be factory automation and the Internet of Things, because it's already highly automated. I mean, it's a manufacturing system and could do more. Energy storage devices, where 3 Korean companies are amongst the leaders, and this is going to be a market that's going to expand enormously, and electric vehicles, if it can enter that market more aggressively, and smart consumer appliances. However, commodified manufacturers such as DRAMs and NAND chips are likely to be imperiled, and Korean producers will have to compete very aggressively if they're going to hold on to those commodity type of markets. But it's going to be a tight race, and it's going to be something where Korea will have to struggle to maintain its share. Finally, let me come to one other area where Korea could do a lot better. One is a continuing focus on manufacturers alone will not suffice, and therefore Korea has to build up capabilities in tradable services, and particularly to improve the productivity of its services. If you look at the service industry in Korea, only 15% of its total exports were of services, which is 1/2 of the OECD average. If you look at the Korea's service sector deficit, it's about $9.4 billion, which is, again, very different from the OECD countries that actually run a surplus on the services account. And a third factor which sticks out is that much of Korea's services derive from transport and construction, whereas very little of it comes from ICT-related exports, whereas again, if you look at the OECD countries, a lot of their services exports are derived from the sale of ICT-related services. Exports of financial services from Korea are a minuscule 1.3% of its export. So here is an opportunity. Korea already is a leader in various kinds of movies and gaming culture products, gaming industry and so on. And this is something where it has established a beachhead and could go a lot further. So bottom line, political uncertainty is high. It's higher than it was 20 months ago. But I think the countervailing forces against populism may dampen uncertainty. One hopes that they will. It's not clear that they will, but they may. But as far as I can make out, there is no evidence of an upward trend. So that is actually somewhat comforting, though maybe it will change again. Economic uncertainty may be lower than it was 6 months ago, in spite of stock market gyrations that might persist. Whether it rises will depend really on politics, on investor sentiments, and as Carl pointed out, on technological change. So thank you very much.
Okay, so I'm going to wrap up in the next 10 minutes, and then we will open it up for questions. I want to take the conversation back to the book itself, which was scenario analysis, which is 5 to 10 years out. I don't disagree that there's some more positive factors showing up in the near term, but as Shahid said, we have to look at the long term. So I think what we did in the last chapter of this book was not only to look at some of these mega trends and possible shocks, but look at combinations of them. I think one thing we learned from the 2008-9 financial crisis is that a lot of the models in banks and in other agencies looked at individual events. No one modeled, 3 or 4 things going wrong at the same time. So we have a heat map in here which looks at, possible combinations of factors that could negatively affect Korea. Again, as I said, this is a preparedness exercise. It's not a prediction exercise. So even though we all may believe in the efficient markets hypothesis, it's great except when it doesn't work. And that's the whole idea of scenario analysis. We look at what if. So one of the facts that, one of the areas that I wanted to focus on has to do with China. And I think we spent some time in this chapter on looking at vulnerabilities and then resilience, looking at China. And one of the reasons that we did was that the export bundle that comes out of China and that coming out of Korea are not that different. So the shipbuilding example is a good one, but there are many others where the technological capacity of the two economies is narrowing. Right, Korea is in the lead, but the gap is narrowing quite dramatically. There's an interesting report that some analysts put a lot of stock in, others less so, called Made in China 2025, which looks at 10 industries or sectors that China wants to not only become self-sufficient in, but wants to establish global market dominance in, including artificial intelligence, big data, robotics, etc. And so this is a threat to Korea if you look 10 years out, because China has market size, it has financial capacity that is unparalleled, I don't think too many people are betting against China these days. On the index of trade complexity, it is true that Korea still does better than China, but if you look at the distance traveled between 1995 and 2014, roughly 20-year period, China has increased fivefold its complexity, whereas Korea has increased 50%. Okay, Korea's obviously ahead, so you would expect some, I don't want to call it convergence, but some sort of catch-up. But again, this is narrowing. So if you believe that China is moving into Korea's product space, and you believe the Made in China 2025 kind of policy that came out of the Central Committee, then one would want to look a bit more deeply at China's ambitions. And the Mercator Institute in Berlin took a look at this 2025 report and identified the countries that were the most vulnerable to this plan. Okay, of course you can put a probability against any one of these 10 industries, but just take it for what it's worth. And they identified Korea in the northeast quadrant of this heat map as being the most vulnerable to the Made in China 2025 report, with Germany and Japan somewhat less so, but still in a significant area. So Shahid mentioned a few statistics from the World Economic Forum and other places, the World Competitiveness Report, etc. And there's good news, but the good news is today's news. This is 2018 WEF report. It's not a 2028 WEF report. So competitiveness indices are somewhat similar. Korea's 26th and China's 28th, so neck and neck. If you look at innovativeness of firms, if you look at market entry and exit, if you look at competition levels in Korea, if you look at the ability of capital markets to fund startups, et cetera, we put some question marks in the report as to how well Korea might fare in the next 10 years, right? We're not talking about today. In terms of financial market efficiency, where the U.S. is third, Japan 17th, China 56th, but Korea 80th in the rankings. On labor market efficiency, Korea 77th compared to U.S. 4, Japan 22, Japan 17, and China 39. So in measures that look at the ability of capital markets to function efficiently, labor markets to function efficiently, Korea is not doing all that well with respect to China. And in this chapter, we say that disruptive technologies are unpredictable. Which ones are going to take hold? Which ones are going to move at what speed? We don't know. What's going to happen in terms of de-globalization? We're not certain. But what we are certain of is that you need to be a flexible economy. You need to be able to move resources around, right? And if you are a chaebol-dominated economy, yes, within Samsung they can move resources around, but that's only one corporation. So there's some issues on the labor market side, some on the capital market side, and also some on the technology side, because Korea is the leader, if not one of the two top spenders on R&D, and Koreans always look at R&D to GDP ratios. But R&D is an input. It doesn't yield efficient or new industries unless there are low barriers to entry and new innovations can take hold, right? So spending is not necessarily the only solution. There's a big link, obviously, between innovation and entrepreneurship, entrepreneurial ability, and there's a link between entrepreneurship and world-class universities, right? So there's a reason why innovations occur in Silicon Valley and in Boston. And so Korea has done fantastically well on PISA scores and other repetitive kinds of exams, right? But we also need to see entrepreneurship being sponsored in order to encourage flexibility in the economy. So our final three recommendations in this chapter focus, one, on the efficiency and flexibility of the economy, which is what I've mentioned. Two, on increasing trade diversification. Okay, there's nothing new in that. You don't want to have your top two export markets account for 40% of your exports and have those two countries perhaps at each other's throats, in which case you're the innocent bystander who will get hurt. And we only have to look at recent experiences with Lotte in China to see how that would operate. The third area that we focus on has to do with innovation and entrepreneurship. We also make some observations having to do with skills, as people around the world are no longer going to be working for one company for the rest of their lives. The idea of continuous learning and skills acquisition becomes more and more important. So this report is not to be read as a doomsday report for Korea. It is the opposite. It's to be read as a report that Korea cannot afford to be complacent, that it needs to be careful in the future of some of these emerging trends. It needs to be careful of unexpected events, but also, as I focused a lot on China, that's, I think, a clear threat in one form or another, assuming they survive the current administration, which is the near-term threat. But we're talking about 5 or 10 years out. And the purpose of this, and I think Carl alluded to it at the beginning, in talking about how we approach scenario analysis, is that the whole idea is for policymakers in the country to think some of these things through, right, in the same way that the military thinks through, what if, okay? The process of thinking it through can be helpful to build up resilience, and we identify certain areas where we think Korea could be more resilient to face any future vulnerabilities or risks that may come their way. So pretty much that's, I think, where we end. We're sorry we can't give out free books, but times are tough at KIEP. So you'll have to look online, but we're happy under the chairmanship of Nick to answer your questions. Thank you.
Under the dear leader, yes. To repeat what I said at the beginning, this is a fine study. This is an admirable piece of work. It is really informed and disciplined speculation in a diagnostic fashion, as Danny was saying, to help policymakers see what they're not prepared for now, what they should be thinking about, because the future doesn't unfold linearly. It's a series of disruptions, and being prepared for the disruptions is valuable. Now, let me abuse my moderator's prerogative for just a moment, because I don't think my value added can only come from praising your study. Let me try to push you all in 3 different areas, 3 questions that I have. Question number 1 is about sort of what we might call it, the Banquo's ghost in your study, the matter of personal wealth holdings. You mention Credit Suisse and their global wealth report. You mention, I think once or twice, wealth, see distribution of, but you don't really go into the whole matter of wealth, its importance to the ROK population's well-being, the options it gives policymakers, all of this. Is that because you don't really trust the Credit Suisse figures, which seem to show a quadrupling of personal wealth since the year 2000 in nominal terms? Danny, I mean, you're a past master at stuff on Korean wealth holdings. I'm curious about the absence of wealth in your analysis here. Second, you mention in the study on a number of occasions black swans. And we want to make the distinction between black swans and bad things that can happen. Bad things can happen. Black swans I usually think of as things that are so outlandish, like a meteor hits Earth, dinosaurs gone, things that people are wholly unprepared for. Today, I think there's a lot of merit in getting policymakers to think about a U.S.-China trade war, or China slowing down, or a repeat of 08, 09, but those aren't exactly things that would seem completely improbable to people today. Just to mention a couple of things right off the top of my head, and they have nothing to do with North Korea, which I know we can't talk about. The U.S. alliance ends. An epidemic in China closes borders, and there's no more cross-country trade of merchandise or movement of people. Populism, which you do mention in your study, somehow becomes so uncontrollable that Samsung and or all of the Jabil are dismantled. There must have been a number of other things you all were thinking about that you couldn't include as your top three, and I'd be very curious about what some of those other ones were. And finally, not least, with regard to conclusions, yes, improve efficiency and flexibility of the economy. Yes, strengthen innovation. Yes, trade diversification. I mean, you're knocking on an open door, at least with me, and I think maybe with many of the people in your audience. The question is, when are these not the conclusions that one comes to for any scenario that one identifies or confronts? In almost all cases, I would recommend those things, no matter what the particulars were that we were discussing. But in which of your scenarios did you find that these were the most pressing recommendations that you came to? And if you were dealing with a different set of scenarios, would there have been additional recommendations that you might have gone towards? Anyhow, just some stuff to throw on the table before we have a general discussion with our audience.
Okay, well, I think maybe I'll take the wealth concentration one, and bad things versus black swans. Either of you want to take that one? We did talk about cyber warfare, but and standard recommendations versus new recommendations. Are you up on that? All right, you'll have 5 minutes, 3 minutes to respond. Well, on the wealth concentration issue, you're right. I actually hired Tony Sharks to work on the Korea distribution of wealth before Credit Suisse was a thing. So I do believe that their data, plus or minus some standard deviation, is correct. So wealth concentration has definitely increased in Korea. Income distribution, perhaps less so, but still more concentrated. So I think we didn't address this, but I think it's part of what I tried to describe as the changing domestic environment in which governments will have to deal with events, whether they're bad events or black swan events, is another story. I mean, actually, when we proposed a trade war between U.S. and China, we thought it was a black swan event. We didn't know that the probability would put it into it's a reasonable bad occurrence. So that's neither here nor there. So I think the wealth concentration issue, the youth unemployment issue, the poverty among the elderly, the aging population, there are a whole bunch of domestic stress factors that Korea could deal with, but seemingly is not doing as great a job as it should. But when hit with some negative events, I think that some of these things will be even more damaging. So I take your point that we only refer to it parenthetically. And perhaps, maybe not for KIEP because they're more a trade policy group, but perhaps if one did scenario analysis for, a different audience, perhaps the domestic stresses, are even more worrisome than some of the international ones. So I don't know if that answers, but I'll turn it over. Bad bad things versus
Right.
black
Okay, yeah,
swans.
and bad things versus really bad black swans. The problem with the real black swans is that you don't know what they are, and it's not clear that you can ever prepare for them, right? So we erred on the side of things that we thought were not really black swans, but possible things that could happen. And that's why also the recommendations are really about looking at things the government should do, which are pretty robust to different scenarios. And I would say that part of the thing that at least some of us found surprising was just how rigid the Korea economy was in many dimensions. And so that's part of what we try to draw attention to. I mean, the lack of the flexibility in the capital markets and in the labor markets. That's a real problem. And it's very relevant for trade war. It's very relevant for the disruptive technology, or just another big crisis. I mean, these are things, given this uncertainty, and given that many things can force the need for pretty rapid readjustment and restructuring, and then the whole underlying, something that they emphasize about, the social safety net in Korea is very thin. If you look at, compared to the OECD countries, it's got one of the smallest shares of government spending in social support. And so that is part of what we were trying to draw attention to, because those are things which are relevant for policymakers. And part of what we are trying to do in this, and this is part of how we approach the scenario, is it's not that, again, we can't predict the future. We can't predict black swans. But we can try to provide a framework within which it's possible to raise issues that may be very useful for policymakers to contemplate more seriously than they normally do, because this is within the realm of things that can happen and things about which they can do something. A real black swan, we're not sure what you can do, because you know what the black swan is. Depends on what it is. So that's how we approached it. So I hope that answers a little bit your questions.
Okay, when we talk about policy, whether it's regard to Korea or any European country and even the United States, I think the few things that come up again and again, one has to do with the labor market. So there is a problem of mismatching of skills. There's a problem of marketability of skills. There's a problem of having vocational training that provides that equips people with the sort of skills that are currently needed. And there's a great deal of uncertainty with regard to what sort of skills will be required 10 and 15 years from now. So this is one thing which has become a hardy perennial. Every report has it, and we throw it at every possible problem. Another couple of things that we throw at every possible problem has to do with infrastructure, whether it's soft infrastructure or hard infrastructure. And we also talk a lot about investing in R&D, particularly basic research, which expands the horizon, and also in things like technology parks, incubators, accelerators, and so on. Korea is doing all of those. I'm not sure that the education is quite what is needed to make it marketable, provide marketable skills, but definitely the labor force is highly trained by the conventional measures. What I think is required, and this is not news in Korea, is the antitrust policy. I think this is one area where, I mean, if you marinate in the stuff that comes out of Chicago, which I do, you find there's an endless amount of material now on the cost of concentration for innovation, for flexibility of markets, for new entry, for barriers to entry. All of these things seem to be related to increasing concentration in the US and industrial concentration almost worldwide. So one of the things which seem to be important for Korea, and I think a lesson from Japan as well, but which seem to be almost intractable, is how to dismantle the geobol, as the United States dismantled AT&T and made a big difference. Now, whether that is politically feasible seems to be, I've been working on Korea nearly 35 years, and this is a recurrent story, maybe 40 years, and still a recurrent story. So I've been hearing this so long that now I'm kind of numbed to it all. But aside from being numbed, because of my exposure to Chicago, it seems to be where a lot more effort could be put.
Ladies and gentlemen, we have time for some dialogue with our authors. Let's set some house rules. not onerous ones. Please identify yourself when you get the mic, and please conclude your question with a question mark, not a speech. Yes, over here, please, first.
Yes, my name is Ken Rosenberg. I think this relates to the most recently made comments. Ever since the era of Pak Chung-hee in Korea, there's been a lot of entanglement of the chaebols with the government, and sometimes this has spilled over into corruption. And I'm wondering what effect this has on the Korean economy's ability to adjust to, change circumstances and in general going forward.
Oh, thank you. John Burton with the Korea Times. You talked about the lag in tradable services, and there are a couple of reasons for that. One is government regulation in terms of financial services. It also reflects on chaebol management practices, and as well as the dominance of the chaebol, which in fact prevents innovation from being distributed to other businesses. A lot of these thus depend on the political climate. And realistically, do you see that there would be any change in the political climate to reform these sectors?
Any other questions for our first round of questions? Anyone else? Let's start with these ones.
Okay, I think the advantage of having a panel is not everyone has exactly the same view, so I think all three of us can respond to these questions. So on the corruption concentration question, I think the pernicious aspect of the chaebol, even though people have a Samsung phone and TV and cars are here, is that if you're a smart Korean with an idea, you probably will take it to California. Because if you are wanting to start up a new advertising agency with a new model, or you want to do packaging in a new way, it relates to what Shahid said about lack of competition policy. One of the chaebol will snuff you out, right? The chaebol have units that are just there to buy up startups. Okay, well, that happens other places too. But it means that you're going to put a damper on entrepreneurship, you're going to put a damper on innovation, and you're going to put a damper ultimately on productivity because you're not allowing these things to these startups to take off. I think corruption is in its own camp, right? I think there's ample evidence that the penalties for corruption are insufficient. But I don't think that's something that our report dwelled on. In terms of the trade and services, part of what I said having to do with competition policy and et cetera, relates to that as well. I don't know about the change of political climate, since Shahid, worked on Korea in high school, so he has some experience on this. Perhaps he could say something. But let me just add one minor point on the issue of inequality, which occurred to me after the fact, and that one of the big areas of inequality in Korea has to do with gender. And in a society that's aging so rapidly, it is not a smart idea to have discriminatory policies. I was doing some PowerPoint for some other purpose, and it just so happened that Korea shows up on this chart, and it's the enrollment rate in higher education among men and women aged 20 to 29, and Korea has the largest difference among OECD countries of 10 percentage points between men and women. So There's wealth inequality, there's income inequality, and then there are other aspects of inequality, and gender, I think, is one of them. But I turn it over to my colleagues.
Okay. First, with regard to whether the gerbil can adjust to the changing circumstances. Let me say the following. If you look at the positive side, you see many advantages from allowing the gerbil to continue as kind of being the sort of the leading edge of the Korean economy. And the reason is the following. Large firms tend to be the most R&D intensive. They tend to be the most productive in terms of patents and innovation. And Samsung is near the top, if not at the very top, in terms of this league. They tend to have global reach so that they can expand into markets very easily. They tend to have internal financial markets, which means that they can support investment in new products. So they can actually take up an idea, and they have the resources, the deep pockets to actually do these investments. They have the marketing and the global value chain networks, which can enable them to push products overseas. And they have the capacity to do entrepreneurship and launch new startup activity. So here are a lot of positive sides. If you look at the OECD data, you always find that there is a small number of very large firms at the top. These are the ones that are generating net employment. These are the ones that are the most productive. These are the ones that are the most innovative. So if you go by those data, the gerbil are doing a lot of good for Korea. That to replace them with something else would take us into black swan territory. And I cannot think of a country of Korea's size that could, on the basis of small and medium enterprises, remain as productive and prosperous as Korea is today. So in spite of what the problems which have arisen about the gerbil corruption and so forth, Korea cannot dispense with the gerbil. The second point I'll make is that because of the institutional strengthening and particularly democratic institutions that has happened in Korea, the gerbil are under some checks. They are being disciplined to a greater extent than was the case in the past. So that is actually a very positive development. Maybe if that continues and there is somewhat more aggressive antitrust policy, you can have good outcomes. Just one word on the political change. I think on the area of tradable services, we've had so much written on the low productivity of Korea's tradable services for long. And there's a McKinsey report. There's so many other reports that have come out in time. Not much has happened since. Korea continues to lag in these services when there is clear evidence that there is an advantage to doing more here. And the servicization of manufacturing means that it's really critical to be moving ahead in these services and essentially supporting manufacturing, because much of the profits from manufacturing in the future and even now comes from the services that are bundled with manufacturers. So that's where Korea needs to move, and it can. And I think the problem seems to be too little competition in the services arena, which may be enhanced through TPP and other measures. I don't know, but it could be. Thank you.
Just wanted to add a little bit on the chaebol. As Shahida said, some of the things I wanted to say, but basically the chaebol did have a very positive role in Korea. And to some extent, to participate in world trade, you need to have big boys that can go there and compete with other big boys. I think the problem in Korea to some extent is what we've just pointed out right now, that it's very weak in the service part. I mean, if you take a look at modern economies, developed economies are 70% services, and Korea is lower on the services than a country of its GDP per capita. And that's a problem because there's been a mindset in Korea where it's been industry and manufacturing that have driven everything. It's the physical, the tangible. But we're in a different world now. Now it's the intangible, it's the services. And if you take a look at Korea, Korea doesn't have any companies in the big platforms for services. China does. China and the US are the countries that have. So Korea is missing that boat. And in part, it's the scale. Korea is so much smaller. But it really hasn't, if we were to do a new report, if someone wants to commission one, we really focus on the service part because that's where Korea has the big weakness and has to do even to support manufacturing. Manufacturing now is more and more services, all the way from the design to the after-sale services and the monitoring and the feedback you get from that. If you go now to Industry 4.0, it's a lot about services, and Korea is weak in that. And so, to some extent, the chaebol have gone in their own dynamic, and they still are too entrenched. Not that they're not doing some services, but they're still too wedded to the physical, tangible world. And I think that's the weakness that Korea has, and it needs to think about how it can stimulate that. And it's not just going to be little things. You have to scale up, because there are big economies of scale in the services too, and big data analytics, and that's going to be where the new battles are going to be fought. And that has big implications for the regulatory side too. And so that needs to be updated. So,
I think we have time for one more round of questions before our panelists make their concluding statements or observations. I see a question here. Are there any? A question there, question here. We've got 3 questions, and then we'll take them to you, and then after that, we'll allow closing statements. Yes, please.
Steve Winters, independent consultant. So there was some comment about a limited memory span for some past crises, but I think recent studies have shown, at least, for example, in Southeast Asia, that the business community is extremely aware, even today, of what they went through 20 years ago. And, of course, then there was the 2008 crisis. So there was a lot of talk, after these crises about putting shock absorbers in the global economic system, so that if you did have another crisis, it didn't just spread and suck the whole global system down. What's so disturbing about your report is that it would appear that this is the last thing that has been on the mind of the South Koreans. I mean, I don't hear anything about any kind of shock absorber. They seem to be totally exposed, whereas if you look at several other countries I could mention, they constantly have been working on this for 20 years. Could you say something about that? Maybe I misunderstood something.
Be moving right along, gentleman here, and then finally Troy.
Thank you. Michael Choi Kim with the U.S. Department of State. So I actually finished my assignment in Seoul in 2016. I just came back and very intrigued by what you've mentioned. In terms of services sector, well, I guess it sounds like financial services. I know the embassy, along with 3 other embassies, worked very hard on legal services and trying to get Korea to live up to its FTA commitments. So is that what you're talking about? I would say e-commerce is fairly advanced over in Korea. A lot of Koreans order online through their apps. You mentioned, Professor Dahlman, big platforms. I guess, are you alluding to Weibo? I mean, Korea, I guess, is somewhat challenged in that they are not very good at trying to introduce products or services that goes beyond their own domestic market. And in terms of entrepreneurship, is it just simply a cultural issue? Because, I mean, there's a lot of mom and pop shops, particularly these days, on chimek, chicken and beer, but probably too many. So I wonder, is it just cultural, where parents don't want their kids to go through the failures of a business, small business? Or is it a legal or a credit issue that banks don't want to lend to them? Since I don't start businesses, I really don't know. And then I guess, what about like the big multinationals? If Korea's populism grows, would that adversely affect relationships with, let's say, Google, Facebook, IBM, who are in Korea now? Thank you.
And I think we've got, yes, one final question.
Thank you. Troy Sanger with KIEP here. So I have 2 interrelated questions and then a separate one real quick. So one, you've talked about how Korea is so, its economy is so dominated by export, something that we all know, but how it's gone down recently. Did you consider any of your recommendations the idea of encouraging more domestic consumption as opposed to, export orientation? And along those lines, the related question is the statistics may be a couple years old, but if I remember correctly, the chaebol actually only support about 4% of employment directly, and it's maybe like 10 or 12% indirectly in the economy. As you have more localization, something that you mentioned is one of the trends, and that likely means that the chaebol will contribute less and less over time, potentially, to employment in South Korea. How then, what is sort of the policy recommendation for South Korea dealing with localization as the chaebol spread out more, contribute less at home potentially? And then the unrelated question is you talked about China 2025 and the different products that maybe face risk that Korea exports now. Some of them, like semiconductors, there's no product differentiation or anything, so you can't really do anything there. But on cosmetics and some other things, you can through brand loyalty. You know, I mean, there's certain cosmetics people buy because it's a certain brand as opposed to maybe the difference in real quality. Are there more things that Korea can do to build brands so that way? I mean, no one would see the Samsung brand as near the Apple brand, which sort of builds in this loyalty where people will buy Apple because it's Apple, regardless of whether it's better or worse than the other product. So could that be a solution for South Korea and China?
Gentlemen, if we're going to end approximately at 4 o'clock rather than 5 o'clock, I'd like you to allocate 3 minutes each to picking the most pressing of the many questions that you were confronted with here, and also adding any final comments or observations in your allotted time. Why don't I ask you to spend 3 minutes discussing whatever you wish to before we conclude? Maybe we go across the way we've been doing. Danny, Carl, Saeed?
Okay, we can dispense with the final comments, so that will save a little bit of time. I guess, again, we should jump in on anything that we like. So I'll go in reverse order. Troy, I don't think we can do much more rebalancing in Korea because savings rates for households are at 5%, so they're already spending. So I don't think that's going to help create a shock absorber of the type that you describe. I have no view on branding of cosmetics or other things. On the from Mr. Kim from the State Department, I think we weren't talking about domestic services, but tradable services. But legal services are also tradable. Unfortunately, I think if you want a contract in Korea, you have to go to Kim and Chang. You're not going to go to Smith, and Jones down the street here. So that's just an example, right? And so it has to do with competition policy and some cultural aspects. On entrepreneurship, I think it's a very complicated topic. There are a variety of answers. One is that a top-down culture doesn't inspire entrepreneurship, right? So that's one. The second is I think there are a lot of younger mom and pop stores now, in addition to what you described, because when 200,000 college graduates take the exam to be Samsung trainees and only 10,000 are taken, or 8,000, then the other 190 have a problem. And my Korean friends tell me that's why there's so many coffee shops, because parents don't want their kids to face unemployment, so they start mom and pop operations. But these are the wrong kinds of entrepreneurial activities that we want to see encouraged. Let me think more about the shock absorbers, unless my colleagues can answer them. I think there's an answer on the global level. I think in the financial sector there have been more shock absorbers, Basel III and things like that, since 2008-9. I'm not sure I would say that Korea hasn't worried about this, but they haven't been sufficiently aggressive, I think. Trade diversification is a good example, right? I mean, there's a lot of discussion about, India is a great market, Latin America is a great market, but you don't see a lot of, you don't see sufficient movement there.
I'll be very brief. On the services, as anybody said, we were talking about international services, not the domestic ones. And I think that there is potential because there's a lot of entrepreneurship ability, but I think that there are a lot of obstacles, both legal and regulatory, to the growth of services. And also from the financial side, services have very big trouble raising money because they don't have any collateral. I mean, if you have some equipment, even a restaurant, you have collateral that the banks can then lend against. So that's an issue of how the financial sector can deal with that. And the other thing I wanted to mention is, the challenge of China 2025 is really massive. It's not just for Korea. It's for the U.S. It's for the Europeans. Because it's a very, very ambitious plan with a lot of money behind it and a lot of government regulation and a very strong national mercantilistic element to it. And so part of what's happening, and this raises one more issue I wanted to point out, is you take a look at individual companies. For them to be able to operate in China, they have to comply with the rules, which means being forced to transfer that technology, and they have this shorter-term view. So they are being beaten by the Chinese because the Chinese have the most dynamic market, and therefore they are going to be complying to a large extent. And because China has this incredible scale, and because it's orchestrating, not always perfectly, and things are very changing very quickly, and you can't do this where the technology is moving so quickly. But they're doing a better job than most countries of putting together the strategies, seeing where the weaknesses are, and addressing them. Well, that's a really big challenge, and all the efforts from everybody else are just little piecemeal bits here and there. And so you have a united front, and you have a completely uncoordinated response, and that's going to be a big challenge. And they're moving really fast and strong into services, including international services. So I think that's where Korea really has to wake up and see what it can do.
Thanks. Just on a little bit on each of them. With regard to crises and memory, if you look at Rogoff and Reinhardt, you find that there is a regular periodicity of crises, not necessarily in Korea and East Asia, but across the world, whether it's Latin America, US, and elsewhere. So there is this drumbeat of crises which echoes through the past. Now, the East Asian economies have been particularly good in kind of buffering against crisis by accumulating fairly large reserves, which was the reason, which was the response to the last, arranging swaps, whether amongst themselves from China and elsewhere, and also maintaining positive current account balances. And this is one of the areas where I think Korea is quite, it currently runs a 7 to 8% of GDP current account surplus. And that, in a sense, makes for a certain equanimity. You are not going to be hit if you're running that enormous a surplus. In addition, and this is related to savings, Korea's savings 36% of GDP. Even household, Danny, is 8% net of disposable income, even though households have a 160% overall indebtedness. They nevertheless are saving a lot. So the savings provides Korea with a kind of a buffer and a cushion and a safeguard. With regard to entrepreneurship, I think there is the concern about fear of failure. You find this all across East Asia. There's fear of failure. If you don't do it, you're going to be, society is going to blackball you and so on. So I don't know whether that is really important. On services, I think the reason why Korea has lagged behind is that so many of its exports are of a commodified kind, which do not require a lot of post-sale services. I mean, they are not selling aero engines, they're not selling aircraft, they're not selling large machinery or plant or equipment. Now, if it moves into industrial robotics and industrial robotization and automation, it will then be in a position to provide a lot of services down the road, which will be a big money spinner. But at the moment, it is not. In terms of Jebel's contributions, I think when it comes to building a brand, I'm not sure that, I mean, the Samsung has a brand, others have a brand. I think these are likely to start off as regional brands. And then maybe they'll move into global brands. And I think currently they are not. But one thing on China, which I should add, China is great at reverse engineering and copying things. But right now, whether it's in wind turbines, any kind of semiconductors, electronic vehicles, anything you can think of, except perhaps quantum computers and launchers, large rocket launchers. There is no evidence yet of innovation, of really breakthrough innovation of any kind. And what I read about top-down innovation systems is they are much less productive than ones that are sort of more of a grassroots grind. And so I think, whereas you may feel differently, I don't think China at this point is positioned necessarily to win the innovation race against all of the others. And all of the others are amongst the most innovative nations in the world. China is at this point, up to now, a copycat. Even in stealth aircraft, it is a copycat.
Ladies and gentlemen, please join me in saluting our authors on a fascinating study and congratulating them on what I think was a superb discussion. Possibly you can entice them to linger for a few seconds if you have some pressing questions after our event concludes. Thank you all very much.